Welcome to Markets Today. I'm your host, Mbithe Muema. It's the beginning of another week, the last week of April in the year 2020, one that has actually seen a lot of activity going forth. In regards to what was happening on the NSE, we have seen the all-share index shed 0.1 percentage points over the week to 135 points. What was interesting, however, was the fact that turnover almost doubled in that 1 week alone. We saw turnover jump 79 percentage points in the week that just ended to close at 4.3 billion shillings in terms of what the traders were doing in the market. The locals were dominant in terms of performance, and they largely were on the buy lines for the blue chip companies. Foreign investors continued to sell out of the similar blue chip companies. For this week ahead, we have a couple of corporate actions that are lined up. Starting us off, we have KCB that has reported a 2.5 shilling final dividend. That dividend closes for the books today in terms of the books closures happening today. What that means is that there will be a market correction with the price expected to close lower 2.5 shillings over the course of the week. We could see KCB trading at about 34 shillings per share based on this correction. Standard Chartered Bank is also closing its books today for its final dividend of 15 shillings per share. That also means that the price will correct downwards, and we expect it to trade at the 178, 179 shillings per share level from the current price where it's trading at. The other important thing to look out for this week is BAT, which will be paying out its final dividend on Wednesday. Wednesday is actually the pinnacle of activity when it comes to the NSE this week. BAT is paying out its dividend. The Central Bank of Kenya will be having its MPC meeting. This has been brought forth by about a month. The next meeting was scheduled for May, but the governor indicated they will be having a meeting this week. We're not very sure what's going to be discussed, but we will be waiting to see if they actually take another cut on the benchmark rate to be able to enhance the stimulus to the economy. Safaricom will also be announcing its full year results on the same Wednesday. This particular results briefing will actually be online, and you can follow it on Safaricom's webpage from 7:45 in the morning on Wednesday. What are we expecting? Analysts are expecting anything between 10 to 13 percentage points in terms of growth to the bottom line. We will be talking to the Chief Finance Officer on the day to unpack the numbers. We'll also be talking to local analysts to understand whether their expectations were met or not. That aside, coming back to fiscal activity, yesterday His Excellency President Uhuru Kenyatta passed into law the tax amendment bill for the year 2020. A couple of measures were passed in this particular brief. Your payee will be reduced from 30% to 25%. This takes effect from yesterday. So if your payroll has happened, then maybe the conversation needs to happen with your HR to amend, but most possibly this might reflect in your May salary as opposed to your April salary. Over and above this raft of measures that have been passed, last week, Parliament also discussed the supplementary budget and what needs to happen in terms of government extending credit into the economy to be able to support different sectors. We want to be discussing this supplementary budget and also look at the government revenues and tax revenues in particular to get a view of what is happening, and are we in a good space or in a bad space, and is everything all caused by what is happening in COVID. With us in studio, we are joined by Mr. Abraham Kamau, who is the Chief Executive Officer of Miradi Capital. Welcome to the show, Abraham. Me. Fantastic. So there's a lot of news happening. I don't know how the week has been in terms of your engagements and you processing economic data that has come through. Perhaps you can give us an overview of how you're looking at the economy today. Very interesting when you talk about acquisitions. Can you still hear me? Sorry, I lost you for a second. Me. All right. I think the key news that we did see last week was Kenya Airways go to a low of 0.97 shillings per share. Airline industry. I know I did have a conversation with you on the sidelines. Maybe you can give us an overview of what's happening to that particular sector. Could we be in a space, Abraham? Could we be could we be in a space where the government can be able to finance these operations by Kenya Airways, or do you see a situation where we follow a similar route that has been followed by Air Mauritius and Virgin Australia in terms of these companies getting into voluntary liquidation? A short-term opportunity for maybe people to buy up the stock at the current level in the hopes that it could double or even triple in value on the securities exchange. Would you advise investors to buy this stock at this price level? I like that point. Okay, so you buy something if it actually has value for its underlying shareholders, at least in the longer term, if not the medium term. Let's get back into the government business operations. Last week, Parliament had an extensive conversation and discussion as well as debate on the supplementary budget. They didn't quite approve it, but we are working with the estimates that have come through from the Budget and Appropriations Committee. What is your read from the discussion last week and what do you expect to happen? So, what are you proposing? How do we balance? I mean, one of the key things that we keep hearing is the need for a review for the wage bill. How does that happen if you have these employees who are probably in unions, who are unionized? It's very hard to actually get into a point of negotiating downwards their salaries. I mean, what practically can be done to actually reduce the expenditure side of government operations? Can't we implement? I mean, if we have an expenditure side of about 3.2 trillion shillings, that's for the current fiscal year, and I think the revenue, at least the last estimates that I have seen, we were able to raise through KRA 1 trillion in terms of taxes. So as you said, we are sitting on a space where we need about 2 trillion, give or take, just to manage expenses for this year. This year ends in June. What happens? Yeah, so clearly, a lot of work needs to be done, but there's a sense either we are pussyfooting or our hands are tied, depending on what side you're looking at. But perhaps you have brought a very interesting conversation in terms of what the government needs to do. We have seen IMF over the weekend, rather on Friday, it did have a webinar talking about the impact of COVID. These were the two key read-throughs for Africa. Because Africa has not been that hit by the pandemic, there could be a possibility of global inflow of capital into some of the countries. I think Kenya could be a beneficiary. But secondly, they did say that a couple of central banks are meeting this week. And the key will be just to find a way to manage the economy and be able to engage fiscal stimulus. Fiscal deficit is certainly an issue. Now, for us as a country that imports oil, you would expect that the fiscal deficit would narrow. But from what you're just saying, Abraham, is we are not necessarily raising money from our revenue generation. So then what happens to our fiscal deficit in the next year? How does that roll over to the taxes that you, I, Wanjiko, the people out there will be taxed either in terms of VAT or other taxes? come from? Because what I'm trying to get at is you and I and other professionals are honestly reading from the book and proposing measures from the book. Now, when you say money needs to get to Wanjiko, you've just told me that Kerry is not raising enough. We're still operating on a deficit. Where will this money come from if not Big Brother? Can I maybe throw a spanner in the works? So, for the longest, the expenditure and the driver for GDP in Kenya has been government expenditure. I've not found any study that has substantiated it, but anytime you go into different forums, it's always Kenya's economy has been reporting GDP growth because the government was spending. Now, the government does not have money to spend, and you're telling me the consumer needs to spend. What does that mean for GDP? And even not looking at GDP, if you just break it down to what does it mean for my well being as Mbithe? What do I need to do in this situation? Because you're not telling me anything positive, and you're right in sharing the facts. But so now, what do I do? Do I sit in my corner? Do I remain scared? Do I keep paying attention to negative news? What can I do as an individual in this economy? Forward. As we're coming to the tail end of our show, I have two final questions that I want to ask you. So, we are in a situation where government needs money, a lot of money. Does that mean there's an opportunity for people to actually invest in government bonds more than there is in other assets? terms of the different assets, asset classes that are out there, bonds, equities, real estate, what are you telling your investors? And if you're not in telling them, what sentiment are you getting from the people that you're engaging with in terms of where to allocate capital at this point in time? Cash is king, and perhaps if you must allocate, look for short-term assets, call deposits, or the treasury bills in the medium term as we deal with this uncertainty. Okay, thank you so much for that. We will await to see the supplementary budget conversation. I think I was talking over you. Were you saying something? Fantastic. Thank you so much for your time. That was Mr. Abraham Kamau. He is the Chief Executive Officer of Miradi Capital. We have had a very long and extensive conversation just looking at different assets and what the government is doing. The crux of this conversation is this. For one, Kenya Airways could be trading at below a shilling, but if you're buying it, what are you really buying, and is there value for you? And secondly, yes, the government will continue to need a lot of money to manage its operations. We might want to see it cut back on its wage bill, but there are too many moving parts at this point in time for that to happen. That means that there could be an additional incidence of tax, whether formally or informally. That said, the opportunity is for you to probably lend your money to the government at this point in time if you have the excess capital. From Abraham's analysis, he sees opportunities in call deposits as well as the 91-day T-bill as you figure out what next on the uncertainty. It looks like from this conversation, equities are not yet there at this point in time. And from my end, as we continue to see the foreigners selling out, the currency weakening, it touched a low of 107 shillings last year trading against the dollar, there could be more weaknesses at a macro level that could actually pull out capital more than it could actually attract capital into this market. That and the fact that there's the COVID pandemic, it could have a negative impact on the bottom line and rather the fundamentals of these companies. So yes, the NSE has still been trading well above the levels we saw earlier in the year, but there could be a risk over low turn. So perhaps not yet the right time to get into stocks. Thank you for joining us once again, and we hope to see you tomorrow as we continue to keep you informed on the key decisions that are driving markets this week. Thank you for your time and good day.